Over most of the last 6 months, our investor clients, including those working with independent advisors, have been moving money out of the market. Now, largely because they're simply rebalancing back to the portfolio that made sense for them long term. We've not seen any major movements this month as the market has, for the most part, been going down. Almost zero correlation between market movements and activity by clients.
Well, we're talking about $3.6 trillion under management at Schwab, and the registered investment advisors, they have about $1.6 trillion of that money that they're bringing in. Are they telling their clients anything different in light of the volatility that we've seen? In the past, they were saying that the S&P 500 was going to go up over the next 6 months. That's what they said in September. What are they saying today?
Well, I think it just is evidence of how difficult it is to predict the markets. And the wonderful work that advisors do for their clients is build a plan, understand client goals, understand client risk tolerance, and then stay with that plan. And that's why you really don't see big market movements by investors, even though the stock market has its bit of a roller coaster of late.
Rising interest rates have been an area that has benefited many savers. Are your clients reallocating into more conservative products now?
They are. You can see movement into fixed income. We went through a period so long where clients earned almost nothing on their cash or on their fixed income investments. And so it didn't really get the level of attention that it is now. But now you get relatively short-term treasury yields in excess of, for example, dividend yields from the S&P, and that's going to make people reallocate a bit more money toward fixed income.
Savvy investors are really concerned about pricing.
Yes.
And there is a lot of competition out there with firms saying we're going to have no fee on our mutual funds or ETFs, so we're going to have free commission trades. What are you doing? Could Schwab have a fee-free ETF or mutual fund coming out soon?
Well, we could. We're studying that. But I think the real issue that we're trying to understand is consumers' view about the concept of free. What I think we all recognize is that there's nothing free. And so if something is marketed as being free, it's just another way to generate revenue from a client. From a trade standpoint, whether it's lower quality execution than the client might be able to get elsewhere, higher receipt of payment for order flow, there's one way or another that a for-profit firm is being compensated, and consumers are very savvy today. So we're studying it, but we want to be very careful about what we do.